This is too good. Don't mess it up. Why now?
It's not bad luck. It's not manipulation. It's self-sabotage.
Welcome to Mind Over Markets, where we master the mind behind the trade.
Let's be honest. Why do you blow your account right when things are finally going well? You had a fantastic week. Your charts were clean. You felt like you finally cracked the code. And then, like clockwork, you become reckless. Why do you suddenly over-leverage, trade more, force trades, and risk capital you'd normally protect? It's not bad luck. It's not market manipulation. It's a deep, destructive force known as self-sabotage in trading, and it's deeper than you think. It's an attack on your own winning streaks. Today, we're pulling back the curtain on this hidden trading psychology trap. I'll show you why your brain is terrified of your success and the exact steps you need to take to stop ruining your own profitability. You felt it. A good week. 3 or 4 clean, beautiful wins. Your account balance is up 10, 15%. Your confidence is through the roof. And then, like clockwork, you do something completely, inexplicably stupid. You double the lot size on the next trade. You chase a move. You break every rule of risk management you promised to follow. And the capital you worked so hard to build, the capital that was supposed to compound, disappears in 1 or 2 reckless trades. We call this a blow-up, but it's really an act of self-destruction. Today, we expose the real psychological reason you keep doing this. This isn't about the market. This is about your mind. Let's start with the root cause.
Self-sabotage doesn't happen randomly. It happens because consistent winning exposes something profoundly uncomfortable: responsibility. When you win consistently, your brain, which is wired to conserve energy and avoid risk, starts sending distress signals. It whispers anxieties like, "This is too good. This won't last. You're not ready for the pressure of success." Your unconscious mind knows that protecting $1,000 in profit requires intense discipline and consistent, boring execution. But letting $1,000 profit disappear requires no effort at all. It's easier to return to the familiar identity. So instead of protecting your hard-earned progress, you unconsciously try to derail it. Not because you want failure, but because failure feels familiar, predictable, and low pressure. You are running from the pressure that success places on your future self. The moment the money starts feeling real, the pressure of maintaining it becomes too much, and you deploy the escape route, self-sabotage. This phenomenon has a name in psychology: success anxiety. It happens when your current self-image hasn't caught up to your recent results. Internally, you still see yourself as the struggler, the beginner, the inconsistent trader, the guy who always loses eventually. This is your deeply ingrained identity. So, when your trading results start to outpace this deeply held belief, your brain creates a massive internal tension. Your current identity and your current results are in conflict. To relieve this tension, the brain does the quickest fix. It pushes you back into the behaviors that confirm your old identity. This is why you trade recklessly after winning streaks. You're trying to return to the only person your brain recognizes, the guy who hasn't quite made it yet. You are sabotaging the results to save the identity. You think the solution is technical analysis. The solution is identity analysis. You must shift from "I am a struggling trader" to "I am a consistent trader who follows his rules."
Let's look at how the self-sabotage manifests specifically on the trading screen. It usually starts with an incremental increase in risk. You see a perfect setup after a good week. You think, "I usually trade one lot, but I'm on a streak and this setup is guaranteed. I'll add one extra lot, just this once." This is the one more lot or extra $100 risk phenomenon. This small, seemingly calculated increase is your subconscious testing your boundaries. You are deliberately breaking your risk management rules. If that trade wins, your confidence is inflated to dangerous levels, leading to even greater risks. If it loses, the self-sabotage is complete, and you quickly give back all your profits. The issue isn't the trade setup, it's the disregard for the process. Your brain is saying, "I'm not allowed to have this much money yet, so let me find the fastest way to shrink the account back to where it feels safe." Remember, discipline is doing the same thing, the profitable thing, no matter how confident you feel.
Let's map out the destructive cycle. 1. The ascent. You win. You feel excited, powerful, and confidently invincible. 2. Internal tension. Your self-image doesn't match this new, successful identity. You feel the uncomfortable pressure of having to maintain success. 3. The release. Your brain seeks to relieve this tension. You take a high-risk trade or over-leverage as a test. 4. The fall. You lose a large chunk or blow the account. The tension disappears. You're back where you belong, the struggling trader. It's a bizarre form of psychological protection. Your brain protects you from the pressure of success by returning you to the familiar, low-expectation environment of struggle. This is why many traders chase chaos. Chaos is the comfort zone of a struggling trader. This is not stupidity. It's not bad strategy. It's a deep psychological protection mechanism that must be recognized and overcome. You don't fix self-sabotage by finding a better entry signal. You fix it by changing who you believe you are. Here is your 3-step plan to cement your successful identity. 1. The Success Buffer Protocol. After a winning day or a great week, immediately reduce your position size by 50% for the next session. This is counterintuitive. It forces you to protect your gains and expand your success identity slowly. Let yourself feel what maintaining success is like without risking it all. 2. Preset maximum daily profit, the lockout. Just like you have a max loss, set a maximum daily profit target. Once hit, you're done. Immediately close the platform. This removes the opportunity for the subconscious mind to ruin the progress, forcing you to acknowledge and accept the win. 3. The Identity Journal. After every big win, don't journal the trade. Journal your emotions. Write down how the win made you feel. Identify the specific moments where you felt tempted to violate your rules. Then, every morning, write this belief 5 times. I am a disciplined trader who consistently manages success and protects my capital. You're not training your strategy, you're training your identity. You don't fear losing. You're unfortunately used to losing. What you truly fear is rising above the person you've always been. But the moment you allow yourself to succeed, the moment you accept that you deserve and can handle consistency, the self-sabotage ends. If this video exposed your hidden weakness, hit the like button. Now, go set a maximum daily profit. Let me know in the comments what your new trading identity statement is. Remember, you don't trade the market, you trade your mind.